Good morning, weirdos. That's what I'm calling you from now on because the Democrats think we're weirdos, so I'm gonna really own it. We are weirdos because we don't want to be like those normal people who like drag queen story hour and all that other jazz. No. Welcome to the news hour. I'm William Bart. I hope you'll join me for this maybe 20 minutes of reading and listening to other people's talk. So here we go. Our first news story for today is the U.S. really heading for recession? The unemployment rate in the United States rose to 4.3% in July, the highest in nearly 3 years, causing debates about a potential recession. And according to CNBC, Dow drops 800 points. NASDAQ craters 3% in global market rout. This is a live update, so earlier I was looking at this and it said 1,000 points and 6%. U.S. stocks fell sharply on Monday as part of a global market sell-off centered around U.S. recession fears. Japan's Nikkei 225 plunged 12% in its worst day since the 1987 Black Monday crash for Wall Street. The Dow Jones Industrial Average dropped 821 points, or 2.1%. The NASDAQ Composite lost 2.7%, and the S&P 500 slid 2.3%. The blue chip Dow earlier fell as much as 1,200 points. Fears of a U.S. recession were the main culprit for the global market meltdown after Friday's disappointing July jobs report. Investors are also concerned that the Federal Reserve is behind in cutting interest rates to bolster an economic slowdown, with the central bank choosing instead to keep rates at the highest in 2 decades last week. So we see here this chart. Dow Jones Industrial Average. It took a very sharp downfall on Friday. Or maybe that's Monday. I don't know. They must skip over the weekend or something. So at 3:55 when it closed on August 2nd, that's Friday. It closed at 39,737, and on Monday at 9:30 a.m. it opened at 38,543. Yeah, that's a mighty big difference. And by all intents and purposes, Kamala Harris is the incumbent, and this is bad for her, because we've already had 4 years where Kamala Harris was vice president. And I'm going to throw this back to Bill Maher. You know him, you love him. I love sharing this clip with my friends and family to remind them how bitter the Democrats are about wanting to win. Let's see what he had to say.
I feel like the bottom has to fall out at some point. And by the way, I'm hoping for it, because I think one way you get rid of Trump is a crashing economy. Yeah. So please, bring on the recession. Yeah. Sorry if that hurts people, but it's either root for a recession or you lose your democracy. I feel like the bottom...
So, yeah, if it hurts Kamala Harris, bring on the recession, please. No, I really don't want a recession. But at the same time, this is what you get with a Kamala Harris presidency. Because she's going to do almost exactly the same things Biden did. Going back to this article, investors are continuing to sell off mega cap tech stocks on the once hot artificial intelligence trade. Tech shares were among the worst performers Monday. Nvidia tumbled nearly 5% Monday after going into the session already down more than 23%. Tech shares were among the worst performers Monday. Oh wait, yeah. Why did I read that twice? I don't know. My brain don't work too good. I'm sorry. Tumbled nearly 5%, Nvidia, Monday after going into the session already down more than 23% from its recent high. Apple cratered nearly more than 3% after Warren Buffett's Berkshire Hathaway cut its stake in the iPhone maker in half. Wow. Other losers included Tesla, down 5.8%, and Broadcom and Super Microcomputer, down 7% and 12% respectively. In Asia overnight, Japan stocks confirmed a bear market as Asia-Pacific investors had their first chance to react to the sour jobs figures in the U.S. from Friday. The 12.4% loss on the Nikkei, which closed at 31,458, was the worst day for the index since the Black Monday of 1987 hit Wall Street. The loss of 4,451 points on the index was also the largest in terms of points in its entire history. The Dow lost more than 22% in a single day on Black Monday. Other global markets were also severely impacted. U.S. Treasury yields tumbled on the recession fears and as investors flooded into bonds for a global safe haven. Bond prices move inversely to yields. The benchmark 10-year note on Monday yielded 3.76%, its lowest level since June 2023. Bitcoin tumbled from nearly 62,000 Friday around 52,000 to around 52,000 on Monday. Wow, $10,000. It's down. I know in market cap that means a much larger number. Where was I? Europe's Stoxx 600 was off by 2.4%. The CBOE volatility index was last trading at 46 after reaching as high as 53, its highest level since the early days of the pandemic in 2020. There's also chatter about the unwind of yen carry trade, adding fuel to the global market decline after the Bank of Japan raised interest rates last week, reducing the interest rate differential between Japan and the U.S. That has contributed to the yen rising in value versus the dollar, ending the practice of traders borrowing in the cheap currency to buy other global assets. The market was whistling past the graveyard. I think people were basically lulled into a sense of security, yet the market itself was very vulnerable to a correction, and the weaker than expected economic and employment data provided that catalyst for correction, said Sam Stovall, CFRA Research Chief Investment Strategist. The S&P 500 is currently around 8% off from its recent high. Chicago Fed President Austin Goolsbee, while avoiding commitment to a specific course of action, indicated that interest rates at their current level may be too restrictive on CNBC's Squawk Box on Monday. If economic conditions meaningfully deteriorate, the central bank will fix it. And I'd like to say, I really hope Donald Trump wins, if not for the singular purpose of preventing unrealized gains from being taxed. That's exactly that's what Kamala Harris wants. The Democrats want. They want to tax you twice on stuff you buy, and by that I mean you hold stock in something, and normally you would be taxed on what you buy and then what you sell, not while you're holding it. But what they want to do is come in and say, hey, we see you've got these stocks, we want to tax you on them. And you're like, what do you mean? I already paid taxes when I bought them. And they say, well, how about you just sell off some of it to pay the taxes that you owe us on it. That is what the Democrats want. It's a very socialist idea, and I oppose it outright. Unrealized gains should not be taxed. That's why I'm voting for Trump. Anyways, moving along. The Fed is trying to fight a ghost as recession fears mount, investor says. This is from CNBC. This is reported by the left, 57%, right 14%. As global market sell-off continues, amid fears of a looming U.S. recession, the Federal Reserve may have little room to maneuver, the CEO of Smead Capital Management warned Monday. And part of the reason this kind of thing happens is because people get fearful and they end up selling. But if they didn't sell, then it would just rebound. What's happening in this article? As a global market sell-off continues amid fears of a looming U.S. recession, the Federal Reserve may have little room for maneuver, investor Cole Smead warned Monday. Smead, who is CEO of Smead Capital Management, told CNBC that the Fed is still attempting to combat the after effects of bumper fiscal stimulus, which have made it difficult to accurately gauge the state of the economy. The Fed is trying to fight a ghost in some respects. The ghost is a massive amount of federal spending on deficit, 7% of U.S. GDP, and it's very hard to counteract a problem like that you didn't create, Smead told CNBC's Squawk Box Europe. I think Jay Powell is doing all he can to understand that problem and counteract it with monetary policy. But it's a fiscal problem, and that fiscal problem's not ending, he said. The market rout extended on Monday, with U.S. futures mirroring losses in Europe and Asia after a weaker than anticipated jobs report for July and a higher unemployment rate ignited worries that the U.S. economy could be falling into a recession. The CBOE Volatility Index, also known as the VIX, a measure of expected market volatility, jumped to 41.65 according to LSEG data, hitting its highest level since October 2020 as risk fears returned to the market. Investors have grown concerned that the Fed has been too slow to cut interest rates after hiking them in a range between 5.25% and 5.5% to combat inflation from the COVID-19 era. The U.S. Central Bank held rates steady at its latest policy meeting last week, but markets are predicting that it may now need to move faster, I guess they meant to say move, and more firmly to prevent a downturn, with interest rate futures contracts pricing in a 70% chance of a 50% basis point cut in September, according to Reuters. Smead said the latest inflation data, which showed price rises dipped in June for the first time in 4 years, was a positive signal for markets, but he noted that underlying issues remain. He said he now sees the U.S. falling into recession at some point, though he added this was more likely to be led by the loss in asset values from the fall off of the stock market. The Fed will continue to have a challenge on its hands as it grapples with the added inflationary pressures of the U.S. election cycle and the prospect of wider conflict in the Middle East, Smead noted. Is it likely to see us tame our fiscal spending in the interim? He said of the election campaign, the answer is no. Whoever comes in, be it Kamala Harris or Donald Trump, there's going to be an interest in trying to prop up anything, he said. Well, there you have it. The global market is crashing, and it's an election year, so you know what that means. Vote for the people who did not cause this, which is Donald Trump. Anyways, that's about it for now. Please, if you like this, smash that like button and subscribe. Share me with your friends and family. Let them join in on the conversation. I'd love to see what y'all have to say about this. Do you have some pointers for me? Maybe some news stories you might be interested in. I'd be happy to comment on that. If there's nothing else, whatever you do, don't have a bad day, and I'll talk to you later. Ciao.